Welcome to our next video. In this video, we're going to discuss price delivery, liquidity, and patterns that I like to take that are very high probability. And it's what I look for every single day in the market. And if I see it, I'm like, sweet, we're going to take that like with extreme amount of confidence. Okay. So let's go over the price here, right? So here, right, we have, our market opening up. And let's just say we have to understand that there's POIs to the left, right? So we understand that these levels are most likely playing off of some type of POI to the left. But for the sake of this video, we're just going to go over how the market creates and runs liquidity. And it does this over and over and over. Okay. And it forms liquidity in certain types of ways. Okay. So first off, as we look here, right? We see the price opens up, it drops. Now it could come up here and test this POI here, but it didn't, it left this unmitigated. So that will be a point of interest for us in the future because we did break structure and we ran down, right? So we broke structure, came up, broke structure again, right? So this validates our POI. And this is what I like to see. I like to see this corrective move, this compression. And the tighter it is, the more high probability it's going to be. We have liquidity below here. Okay, we would enter here off this POI that would be somewhere in here and on the 1 minute chart. And then we would anticipate running this low, and this would be our target here. Okay, so from here, right, we continue dropping. And if you wanted to scale off a size, which I don't recommend, I just recommend taking your full position out here and then letting this run here. We can always get another entry. Remember, it's not about how many R you get per trade. It's about compounding that R. Okay, so here we start trading sideways and then we form liquidity above and below, right? This side has not happened yet. So as we're seeing this, we can anticipate that this could possibly just get ran out, right? Without even coming up and wiping out the top. We'll just wait what price wants to do. Now, let's say price does in fact run these highs. It runs it inside a POI left in here. Okay. Now from here, what do we leave behind? We leave behind equal highs. Remember, from here, we left behind equal highs up here. Okay. As price enters here, our next entry would be here, right? Inside the POI that was in here. To run these lows, that would be our target. Price drops, and then now we start coming and breaking structure to the upside, right? Now you can easily take a trade from here. If it returns there, you can take a trade from here. If it returns here, and you can take a trade from here. Targeting, right? So if we're in this trade and we have stacked our positions in here, right? This can easily, like this POI right here, it could easily mitigate from here, leave more equal highs and run you out here, but we've already taken profits at each of these highs, right? So we would have profit here, we would already be out of these markets, right? If I bought here, I would anticipate that this high would get ran out, okay? I would anticipate that for sure, okay? But in some scenarios, this will mitigate, right? Sometimes it will mitigate to run these lows here. So we don't know if this is going to run the lows down all the way to here. We don't know that, okay? That's just something that we have to understand, that we've already won several trades. So it's okay to take this trade and hold it above this high to run it, okay? So we want to understand that, yes, price can mitigate from here because we did break structure, but it could also just have a small retracement and then run higher, right? Aiming for this POI here. So you could even take a sell here, targeting here, buy here, targeting these highs up here, right? So price runs these highs, makes a new higher low, and our target is here for a sell, right? So with that being said, from that area, sorry, my mouse died 1 second. So from this area, right, we would take a sell position, okay, aiming for the POI here. We can easily take a sell from there, right? So price is typically going to run the liquidity into some sort of POI above here, right? It has to trade to something to create more equal highs. And we have equal highs here, here, here. So we have all this liquidity up here, okay? So we could take a sell from there. And then if we start seeing consolidation like this is a great entry. Taking our buy from here, running out all these highs up here. Okay, so we want to be able to get, like when I see this is my favorite type of setup. When we have this corrective move into a POI that had broken structure to the upside, right? We broke the structure here, moving up, creating more liquidity above, running that liquidity, right? Running it above into this unmitigated POI up here that we can take a sell from. And we would have our entry there and maybe some sort of retracement up into here to take an entry. This was, if this came up here, we could easily take a trade from there if we had some break of structure or something, right? Anyways, our target for this trade here would be these equal lows, right? So remember, we're always creating liquidity. So we're creating this liquidity here, leaving behind liquidity in here to run up, to take out the liquidity here, creating new equal highs, right? Creating new equal highs above, running down, right? At this point, I'm targeting the liquidity here, like from here, okay? Now, you see how this low runs the liquidity here, and then we get this entry here. Where is my next target? And these are typically trades that you can hold longer when you have liquidity that is clearly being targeted, right? So from here, we could target this liquidity there, right? Which also will create new equal lows down here, right? So we can expect price to come back up here, run the liquidity up there, and then possibly in the future, go the opposite way and then run the liquidity below. So if you understand how price delivery works, you're seeing how it's always creating more liquidity, running through liquidity, creating more liquidity, right? Running the liquidity. Your entries here, moving down. Okay, when I see these type of patterns, and let me clear this. Okay, when I see this type of corrective pattern, these are my favorite patterns, right? Because they usually cause an explosive move to the downside, right? So all these traders are trapped, boom, we get a nice pop, okay? So yeah, that's how we understand pretty much market mechanics and price delivery. And we understand that like on the left, there's more POIs that these are playing into, right? So we have to understand that these are all trading to some sort of POI, either on a lower time frame, higher time frame. And that's why we have our zones marked from the higher time frames. I don't typically go down to the seconds chart. It's just too quick for me and not enough data being built up. So anyways, I hope you enjoyed the video.